oil still trading around a 4-month lows after yesterday's huge drop. For the third time in history, the International Energy Agency announced it will release oil from emergency stockpiles. First instance during the Persian Gulf War, second after Hurricane Katrina hit the Gulf Coast. Stephen Schork says the IEA's move just short of a joke. Stephen is with us now. He is president of the Schork Group in Philadelphia. Stephen, thanks for joining us.
Sure.
So clearly Western nations want oil prices to be lower. Will this recent move make a difference long term in the price of oil?
No, it's not. This is actually a Band-Aid on a very fundamentally stressing problem right now. That simply yesterday's move is a clear signal to the market that there really are capacity constraints, that coming out of a very contentious OPEC meeting, Saudi Arabia alone cannot do it. So let's go back and look at this announcement. It's purely symbolic. We're going to release 60 million barrels of oil onto the market. We're talking about a market that demand is upwards of 90 million barrels per day. So at 60 million barrel release, we're talking about 2/3 of one day, or about 16 hours worth of supply. So clearly it was symbolic. Now we have to look at the timing. Oil prices were already moving lower. They were moving lower because the dollar was moving higher. Now, this announcement comes in the wake of really a string, 2 months now, of lousy economic headlines, both here in the U.S., but also the trouble that we're seeing, obviously, in Greece and the other pigs in Europe. So as you just alluded to, why are we doing this? The first time we did this was, well, it involved Saddam Hussein's annexation of Kuwait. I understand that emergency. Number two was in the wake of Hurricane Katrina, devastation to the U.S. refinery epicenter. I understand that emergency. If you go ahead and read the DOE release yesterday, they cited what? July and August are right around the bend, and prices are high. High prices in the summer do not constitute an emergency. So now what's the result? Obviously, the government is trying to control price. Has that ever worked before in the past? So we run the risk of this backfiring in the politicians' faces right now.
Do you mean, Stephen, that the market is just going to take the other side?
Oh, absolutely. What's going to happen is with all markets, they follow the path of least resistance, just like water. This is why you get crooked rivers, and this is why you get crooked chart patterns. What's going to happen here is I think the template is set for a move below $90. I've been saying that since March.
I was just going to say, you were on with us last time saying that, so I was wondering if this supply injection was part of what you foresaw.
No, absolutely not. I did not foresee this, a move of such political taint. No, I did not see this. But that said, if the dollar continues to move higher, I certainly expect to see New York oil below $90. I expect it to close a gap at around $88, $87. I think that is certainly within the cards, a real good possibility. But I'm not so sure they can push this thing lower. So now what happens? It smacks the decision yesterday of desperation, that the supply constraints are really greater than we've been led to believe, and therefore, what's that going to do? Well, if demand is there and you don't think there's enough supply, which way do you think prices are going to go?
So traders heard the message. They understand now there's limited supply and the price is just going to go up.
I tell you, that's what I've heard. I've been bearish oil for most of this year. I sold into, I did not sleep at all in the month of April because I sold all the way in that run-up. Now, I was fortunate. I did get rewarded in the first week of May, but it was difficult. So at this point, you're talking to a guy who's been bearish more often than not, and yesterday's announcement turned me to the bulls' side. I don't think the government made a very wise choice yesterday.
Stephen, if this decision flies in the government's face, how high does oil go and by when?
Well, that's just it. The government only had one hand, and they just played that one hand in a market that was falling. So now if that market starts falling, we start rising, they can't play that hand anymore because the market is going to shrug it off. Look, we got up to $115 crude oil in April. The Brent crude oil market in London got up to $127. We were just there 2 months ago. There's no reason why we can't get back up there, unfortunately.
Getting back up. Stephen, thank you very much.
All righty.
Stephen Schork joining us, the president of the Schork Group from Philadelphia.